2026. So very, very comfortable that the second half of the year will be considerably better than the first half, and that we will achieve that production guidance for the year.
Hello, you're watching Proactive. I'm joined by Mark Learmonth, the CEO of Caledonia Mining. Mark, very good to speak with you. Caledonia has just reported results for the second quarter of 2026. What would you highlight as the key achievements during the period?
Yeah, morning. I think the first and foremost is clearly safety. No lost time injuries in the quarter. I think we've now done 400 LTI-free days and 5.5 million man hours. So that's an excellent result. In terms of production, we produced 17,400 ounces of gold. So that's a significant improvement from the first quarter of 2026. Cash increased substantially from 36 million at the end of 2025. We're now at about 172 million. And costs, whilst at first blush the costs may look a bit alarming, the cost per ounce in the quarter was clearly better than it was in the previous quarter. We're still somewhat under pressure during the quarter because of the grade. But as we now got grade under control, I think we'll see these costs come down. It's also worth noting that the on-mine cost per ounce and the all-in sustaining cost per ounce do include some sort of accounting oddities. So the on-mine cost includes about $3.2 million of dividends that were paid to the workers by virtue of their 10% shareholding in Blanket. And the all-in sustaining cost also included about $4 million of expenses we incurred on the issue of a convertible bond in January. So having said that, the cost per tonne is little changed from what it was this time last year. And as we get the grade back to where it should be, I'm confident that we will see these costs come down. I think the other key issue which bodes well for the future is the successful implementation of a 7-day working shift at Blanket. And then obviously continued very good exploration results at Blanket and at Motapa.
Blanket delivered an 18% increase in gold production compared to the first quarter, Mark. What drove that improvement, and how pleased are you with the operational performance of the mine?
Well, that was entirely by grade. So the grade increased from 2.5 grams a tonne in the first quarter to just under 2.9 grams a tonne in the second quarter, and it's continued to improve into the third quarter. And it's grade. It costs the same amount to move each tonne of ore. And if that tonne doesn't contain as much gold, well, it clearly has a very adverse effect both on production and costs. So it's grade. And the higher grade reflects the investment we've made over the last few years, which is now coming to fruition. Investments in systems and people to make sure that we're running our MRM operation in a more modern way, and also improving our controls over mining to make sure that we go mining in the right way in the right areas.
Alongside the operating recovery, as you mentioned, the company reported strong financial performance and cash generation. How would you describe Caledonia's financial position today?
Our cash position is actually a lot better than we'd expected it to be at this stage. So as I said, we've got a gross cash of 172 million. As we've announced, we did a convertible raise in January this year. We increased the size of that, so I think we netted more in that process than we'd expected. Internal cash generation from Blanket is absolutely on track, maybe a tiny bit ahead. CapEx spending at Blanket is slower than we'd expected, and that's just a phasing. But also the expectation that we had this year to spend $132 million at the Bilboes project, we've revised that expectation. That doesn't reflect any change in the scope of the Bilboes project or the timing or the size of the Bilboes project. It really just comes out of the procurement process that we're going through at the moment. The suppliers of long lead time equipment are being less demanding than we'd expected. And so instead of spending 132 million this year at Bilboes, we're expecting to spend about 50. So all in all, our cash position is actually considerably better than we'd expected.
You've reaffirmed production guidance for 2026. What gives you confidence in achieving those targets during the second half of the year?
Well, the core operations are now running as planned, and that's tons and grade. So without anything else, but there are a few other things I'm going to talk about. Without anything else, we expect Blanket to produce about 40,000 ounces in the second half of the year. So that gets us to the bottom end of our guidance range. But on top of that, we've got a couple of initiatives that will add about another 3,000 ounces in the second half, particularly September, October, November, December. So the first is that we later on this month will complete an upgrade to our elution circuit. That will add about 1,200 ounces from August onwards. From September, we will be repurposing a small metallurgical plant at the Lima shaft, which is a few hundred yards away from the main metallurgical plant. That will allow us to process about 200 tonnes a day, arising from the increased run-of-mine production, which comes from the shift system, which I spoke about. So that's about 2,800 ounces, and then we may get a couple of hundred ounces in the fourth quarter when we start our trial mining and trial heap leaching on an oxide project. So very comfortable that the second half of the year will be considerably better than the first half, and that we will achieve that production guidance for the year.
There's also been progress in a number of growth initiatives. Can you update us on the latest developments at Bilboes and what investors should be watching for over the coming months?
Okay, Bilboes, there's two aspects of Bilboes really. One is the funding, and it's difficult to see anything on the funding until it's done. All I can say is that the interim funding facility, we're looking for $150 million from a consortium of Zimbabwe banks. The two lead arrangers, they've got their credit approval, so that's more than half of the 150 million. And a couple of weeks ago, we had, I think, 45 bankers from the other prospective members of that local syndicate visiting Blanket. That went very well, and they are now going through, those banks are now going through their own internal credit processes. So that's going very well. Then in addition, we're also looking for a $300 million project finance facility, which part of that will be used to repay the interim facility. We had the two lenders at the mine and at Bilboes week before last. And again, that's going very well. So the funding, making good progress on the funding. On the project, we've signed up Metso, who are the owners of the BIOX technology. They will provide that technology. DRA are being very close to signed up as an EPCM contractor, although we're already working with them under a short-term arrangement. And as I said, we started the tendering and procurement process for the first set of long lead time bits of equipment, which is the mills and stuff. So we expect to have people on the ground in October doing work on the initial infrastructure, and we're still looking at first gold pour in late 2028, with 2029 being the first full year of production. So very much proceeding as planned.
During the quarter, you reported encouraging exploration results from Motapa and continued work at Blanket, including K-Pits. How important are these projects, Mark, to Caledonia's longer-term growth strategy?
Well, Motapa, as you see, we had good exploration results. We expect to publish a maiden resource there in the next next 4 weeks or so. But let's be clear, that's only the starter. We've got several years left of exploration to do on Motapa. And so quite what effect Motapa will have on the overall business depends on what we find. But given the fact that it's immediately adjacent to Bilboes, means anything significant we find there will be used either to increase the rate of production at Bilboes and or extend the life of mine. So Motapa could be a very significant uplift in value for the group. Blanket has several growth initiatives. The first, as I mentioned, is the introduction of 7-day working week. That should add about an extra 100,000 tonnes a year of run-of-mine material. In the short term, as I've mentioned, some of that's going to get processed through Lima, but we've already committed to spend about another $3 million this year upgrading the main metallurgical plant at Blanket so it can treat that extra run of mine material. And then, as you've mentioned, we've got the K pits where we've found what appears to be a new oxide and possible sulphide resource. We'll publish a resource statement on that again in the next 4 weeks or so. It's very difficult for me to talk about, what oxide mining we might do until we've actually published the resource. But we do intend to go trial mining in the fourth quarter of this year, an initial 10,000 tonne trial mining and trial heap leaching process. And if successful, that we'd then go full scale mining in 2027. But you understand, until we've published the resource statement in the next 4 weeks or so, it's a bit premature for me to talk about actually what we might start producing from a resource that doesn't technically exist at this stage. But all good, all good.
Finally, Mark, the key milestones and catalysts your investors should look out for between now and the end of the year?
Well, as I mentioned, we're looking for a very strong end to 2026 as a result of the initiatives I've just spoken about. By the end of 2026, we'll have finished the budgeting exercise, and so we should then be able to give some clarity as to the outlook for 2027 and beyond. But I'd be disappointed if it isn't higher than the current run rate, with the with the investments we're making to upgrade the plant at Gunnion, and also the potential for oxide mining. And at Bilboes, you should see the finalization of the interim facility in the next sort of 4 weeks or so, 4 to 6 weeks. And then I would hope some news on the project financing by the end of the year. And then clearly we'll continue to implement the project in terms of getting going on the infrastructure.
Mark, I hope you'll continue to keep us updated with your progress. Thanks for your time today.
Thank you very much. Thank you.
Mark Learmonth, the CEO of Caledonia Mining.